Hi guys, I'm pleased to present our next keynote. We have Benjamin Richter from Google Cloud talking about the evolution of digital money beyond stablecoins.
Thank you so much. Good morning, everyone. Everyone is trickling in. Hope you had a good evening after a fully packed day yesterday, and we can hopefully keep up the momentum and continue talking about stablecoins today, while last night, I think the timing couldn't have been better. First stablecoin IPO with Circle. My name is Benjamin. I work for Google here in Zurich, but oversee our Web3 efforts across all of Europe or EMEA. And I'm here today to tell you about a little bit our perspective on this kind of revolution that's happening in the payments markets. And maybe we can take a little look, or start by taking a little look what happened last year. So if you crunch the numbers, you will see that about 30 trillion transactions were processed using stablecoins. While this number is quite large, if you dig a little deeper, you will actually realize that only 5 trillion of those, still a big number, were kind of what is considered an organic transaction. So the majority of stablecoin transactions are by bots or for conversions and settlements, but there's still, even on the organic side, a big demand and usage for stablecoins last year already. I think the amount skyrocketed quite a lot last year. And just to give a bit of perspective, for me, these numbers are not something I have to deal with in my day-to-day life. I think Visa processed about $13 trillion in payments last year. So it's almost half of what Visa has been doing just in stablecoins. And another kind of, that also means that the way stablecoins work right now with these like one-to-one backed reserves, about 1% of US dollar M2 money sits in stablecoin reserves, which that's quite a significant amount. And if you look at it, what stablecoins are, you can kind of go back to the 18th century. Before I prepared this talk, I didn't even know about that this is the case, but money, the way we know it, kind of started by private institutions, banks issuing it, and that's what it's called, like private money. And before that, you would probably like barter with like metals or precious metals. So some institutions started issuing money, but of course there is a risk to that, because if that institution fails, also the money that you held that gives you guarantee to have access to the reserve is useless. And later, these banks realized that, okay, not everyone redeems the reserves all the time, so while we hold on to them, we can maybe make some additional profit. And fractional reserves model was born, the way we know it today, that banks don't have to hold on to like a one-to-one ratio and can use that for additional profit gains. But of course, that comes with additional risks and requires additional regulation, the way we see it today. That's why it's quite difficult to obtain a bank license, and we have central banks that are highly regulated to make sure this stays safe. And that's why we have this two-tier model right now. So we have maybe start at the bottom, central bank money that these banks use to settle between each other. And then we have by the way, the cash that the bills you hold in your hand are also central bank money. And then you have commercial bank money, so anything that you access your bank account or to pay your rent, that would be the money in a way that is issued by your bank. And this comes with like a few challenges. So all these like different systems have a lot of friction, and it is estimated that by 2030 about $2.8 trillion will be lost in this friction, which represents about 2.6% of the global GDP. And also these payment systems, they always need to be updated and need to be maintained, and that creates a lot of cost for the banks that use these systems. And the ones kind of suffering from this, of course, are consumers, but also businesses. Like if you look at Walmart, specifically when they have a lot of consumer to business transactions, like card transactions, they have to pay the fees that are occurring because the system behind it is quite cumbersome to maintain and quite slow and full of friction. And we've seen now over the last couple of years, and here at this conference, when everyone kind of knows about like upcoming new technologies, distributed ledgers, that there is a better way to do it. You can have simpler transactions and workflows that are available all the time at instant speed, and multiple assets can be traded that way as well. So instead of having to maintain siloed databases and keeping them in sync. And that's basically where stablecoins came into play and realized, okay, we can use this new technology to offer a familiar service. And for users, of course, it's absolutely amazing. You have the way faster, lower cost transactions. You can do this beyond certain restrictions. And for the issuers of these stablecoins, it's highly profitable. I mean, as I just mentioned initially, if you look at what happened last night when Circle had the IPO and immediately the stock price skyrocketed, I think it shows everyone understands that this is a useful business. And this, of course, leads to even more growth in that area. We've seen a few examples where Stripe can kind of help you accept stablecoins. Visa has some integrations. And it's really beneficial not just for the user, but also for the business, because these fees can be lower than what traditional payment providers would charge. But these stablecoins come with a challenge. Or not just one, actually several challenges. And first and foremost maybe is the regulation. It is lagging behind, and certain things are unclear, which also means that certain businesses and business areas are excluded from participating in the stablecoin use. And then I think another really important one is the compliance aspect, that I think 63% of illicit transactions were done in stablecoins. So these are also popular among non-approved business or use cases. And there's a scalability issue because when this really takes off, so I think in 2024 we had 6 billion amount of transactions, and traditional cards like Visa, Master, they do 100 times this much. So we have to also see if stablecoins can keep up, if they kind of get more growth the way it has been in the past. And another factor, of course, is there's a risk for banks. If stablecoins hold on to more and more reserves that are then taken out of the banks and they don't have access to this anymore, it undermines the business model of banks. And also, what I mentioned initially, a lot of money that gets stuck in these reserves of the stablecoins issuer. And there's of course also the risk that these are not so the same, they're not regulated the same way a bank is. They are some of them don't have audits that prove that these reserves exist in its full extent. And lastly, of course, there is not just one stablecoin. We have a quite fragmented market, and maybe it's for the better because competition can be a good thing, but it also makes things more complicated and costly again, because you have to sometimes bridge a stablecoin from one chain to another, and then it adds fees that we are actually trying to get rid of. So it might not be the best solution long term, but of course it has been a disruptor. And for customers and clients, they have a choice. They can use traditional payment methods, which they might be familiar with, which have low risk and are highly regulated, or they can kind of benefit from some of these new payment methods, but there are risks with it. And for banks, it's a similar situation that on the one hand, they have an established business model that they've been really doing well with for many years, and they might want to protect it. Or they can also look at, okay, let's move on, and there is a new technology, something better. We can maybe benefit from this as well in an even better way. But they're a bit stuck, and that's where we believe we can maybe help out a little bit, because when it comes to building global scalable infrastructure, Google has a lot of experience. We have 9 products that have more than 1 billion users, and this you don't build overnight. And so we think there is a chance for some partnership where Google can provide infrastructure for this new generation of global, fast, 24/7 multi-currency programmable payment system, and really provide a bit of an upgrade to this ever outdating infrastructure that we are currently using that banks are currently using. And we call it quite a complicated name, Google Cloud Universal Ledger, GCUL in short. And here, this is the little jar on the top right corner says this is in an experimental state. It's like a preview. You have to you cannot just access it yet, but we are like collecting feedback, and like that's also what I'm here for. Like, please reach out if you're interested to learn more, or maybe you have some ideas how we can partner. But what this is all about is that we built our own distributed ledger that is way easier to keep synchronized than databases. It is operating 24/7. If you partner with us, you don't have to. We will take care of the infrastructure and kind of updating it. You just interact with an API. It's easy to use, so it really targets at banks, that banks can still be in charge of the accounts and the payments and have the direct customer connection. It's clear with regulation. It doesn't require new assets or asset classes, and it's the intent is really to have a distributed ledger that allows you to do these transactions. The settlement will still happen off-chain. Traditional methods will be used, but the transaction can already be processed in real time or almost real time. And it will be familiar money concepts. We support fiat currencies, but also real-world assets, or you can tokenize assets. And it's really not a competition to existing systems. It's like an additional step that can speed up payments and transactions the way they currently run. And as I said, it's in preview. That means that we are still testing, but it also means we're open for feedback. We want to hear where this can go and what is needed and how we can help. And maybe just to highlight from our perspective where we think we can fill a gap that is not so easy to fill otherwise. We want to keep it really simple. So you don't have to, you don't need a whole new engineering unit, you don't need new regulation. It's really a service that can be used via an API. We will make sure it receives upgrades. It is permissioned in the beginning just to kind of comply with the policies that we currently have. But while policies evolve, the idea and also hope is to open it and make it more like a public ledger with less permissions to participate. But for now, it's kind of, we believe it sets us apart. It's a really important piece to make it work. And it allows programmable money, so we do support smart contracts. Also, to make it more accessible, these are written in Python, which might be a language more developers are familiar with. And if you look at this little table at the bottom right, if you compare a little bit what a public ledger would struggle with, we see this a lot when protocols are being compared to each other, that the transactions per second is a measurement, and high gas fees can occur in terms of performance problems. There's lots of compliance, open questions, and then also operations can be quite tricky, like when the protocol receives an upgrade and you have to manually kind of follow along. And then with private ledgers, the only solves the problem of compliance with the kind of permission piece. So we believe we can, with our experience and the way we position this, hopefully address all these three areas in a successful way. And what can this be used for? So there is kind of this obvious use case that cross-border payments can be made easier, and this is would require some banks to partner with us, and we have already announced one partner is also there. Also here, the CME group as one possible partner that will have access to this ledger. But then also businesses can benefit from it, because if you're a business and your bank is participating, and you want to do a transaction with another business that has also an account at the participating bank, you can already benefit from all the kind of advantages of near real-time processing and 24/7 availability. And it's also open for new types of assets. It's not restricted to specific currencies or fiat currencies, and way easier than to handle those. And just to kind of bring it all together, I mean, we also have, this is not only a conference about stablecoins, but also more broader developments in technology, and agent has been a big topic also yesterday. And of course, agents will need to probably transact with each other in a really fast and lightweight way, and this tool will also help with that. So it's kind of designed for another use case that we believe will become very important. So if you want to learn more, I put here a link. This is a form that you can fill out, express your interest. We will then get back to you. But also feel free to reach out to me directly today or online, and I'll try my very best to answer more questions, but also quite honestly, this is really early stage. I'm glad I can already talk about it, but I don't have all the answers yet. But thank you so much for showing up this early, and have a great rest of the day here.